Hello, guys. So here today we have Julian Koh, who is co-founder and CEO of RBN Finance. It's a protocol which automates crypto option strategies and allows you to earn passive yield. Great to have you here, Julian.
Thanks for having me.
So can you tell us how you got into crypto? What's your background?
Sure. I got into crypto in sort of 2016, 2017. I think in my freshman year at college, I was sort of just reading a bunch of stuff and I got into crypto, and I was lucky because our school had like a pretty strong crypto group. So like the founders of AVAX and Tezos and a bunch of other projects were alumni. So that's how I got into crypto. Obviously during 2017, I started like buying a bunch of gambling on a bunch of ICOs.
So where
I
did you
think
study where you met the other people from Tezos and Avalanche?
At Cornell. So the CEO of AVAX is like a professor there. He was actually like teaching one of the classes that I took. So
Nice.
knew that whole group from there. But yeah, I mean, I bought a bunch of ICOs in 2017, obviously made and lost a lot of money. And then I started to take crypto a lot more seriously. So I after sort of a few years of college, I dropped out to work at Coinbase. So I was working on a bunch of like staking related stuff for a few years, and I left in 2020 to start RBN.
Yeah, so how did the idea of starting RBN come to you?
Yeah, so I mean, I was sort of just following like DeFi very closely, and obviously participating in DeFi Summer. And I think on the tail end of DeFi Summer, both my co-founder and I, we were just like playing with all the different projects, and I think we both felt like a lot of the yield products in crypto were sort of just like fueled by shitcoins, and if you sort of remove the shitcoin incentive to these products, like the actual yield in these things are actually really low. So I think we were just looking around and thinking about, okay, how do you build like a high yield product in crypto that doesn't rely on shitcoins, that maybe can use some sort of financial engineering to be created. And at that time, we were also looking at some of these like Chinese exchanges, Chinese brokers. They were selling a lot of these structured products to like Bitcoin miners, ETH miners, which are basically like yield products. And these huge Bitcoin miners like really like using this stuff. But I think we've sort of figured out, like, if you want to go to these brokers and ask for like their Bitcoin yield product, like the minimum might be like 100 Bitcoin or something. And for most regular users, that's like quite a lot of money. So I think we sort of looked at that model and we thought, okay, how do we recreate that in DeFi? How do you bring that kind of product to DeFi as well? Which is when we came up with this idea for these like option vaults, which is really like a strategy that helps you automate selling puts or selling calls against your collateral. So we launched that in April of last year. I think we reached a high of like close to 400 mil of assets. Now it's sort of sitting at about 100 mil.
And as well, can you explain to people who are not much into finances what options are? So basically, I guess they as well your target audience, people who are just like average ones and just want to earn yield from their assets.
Yeah, so I mean, sort of, there are obviously two major types of options, which are like puts and calls. Maybe very simplistically, a call option gives you like the right against the right to buy an asset if it goes like really high. So basically, to think about it really simply, if like I buy a $2,000 ETH call and ETH goes to $5,000, I'll be able to pocket that difference, like 5,000 minus 2,000. So that is really why people buy these call options. And very similar to put options, where I can buy like a put option on ETH for like $1,500, and if it goes below that, I'm sort of protected on the downside. So I think those are like the two major reasons why people trade options, for sort of leverage on the upside or protection on the downside. But on the converse of that, if instead of just buying options, which is what most people are familiar with, like all the Robinhood traders buy these like Tesla calls and all these like crazy GameStop options to really like gamble, basically. But on the flip side, if you are sort of interested in yield, you can actually sell these options. So Ribbon is sort of focused on selling these options instead of buying them. So it is really much more of like a yield product compared to something that gives you like crazy upside if the asset does really well.
And what are the potential risks in this strategy?
Yeah, so I think our most popular product is like the ETH Covered Call product. So how that works is you deposit 1 ETH into Ribbon, and you every week you'll sell an out of the money option against your ETH. So for example, last week ETH was at like 1700 and we sold like a 2100 strike. So if ETH doesn't go above 2100 that week, you just earn like a premium for free, which is like the yield that you get. So for example, I mean, currently ETH is still like 16 something. So it didn't cross 2100, so you did collect the premium. So that's generally how the product works. But in times of like crazy volatility, if ETH really like goes like if it goes up a lot within a week, you could lose some ETH. And that is like the main risk behind it. You are selling sort of potential future upside on the asset. So yeah, I think for a lot of our users, they feel like this risk is worth it, which is why they use the product.
So what are the average checks people put into options on your platform? And do you have more retail audience, or do you have some big whales too?
Yeah, so our platform skews very much towards retail. I think the last time I ran the numbers, which was maybe a few months ago, the median deposit size was something in the range of 10 to 50K US. So I would say retail as in not like $100, but more like 10,000 or 20,000. So I think the majority of our audience is below 100K, but we also do have some big users who have like 7 figures on the platform. I think historically our biggest user had almost like 10 million US on the platform. Yeah, so that is like the distribution of how our users look like. But I think right now we are sort of trying to expand towards getting more of the institutional side, because I think our current platform is mostly retail already.
And as well, I see the highest API you have on covered call TRICC, over 283%. So can you tell more? How does it work, and how is this API sustainable?
Yeah, so I think obviously we think like our core value proposition is you get some base yield from selling these calls. But we also do have incentives for us to grow our platform. So I think if you go to the website, the base is sort of something in the range of 20 to 30, and the sort of added incentive is sort of given in our token as incentives, and that varies from a week to week depending on the price of the token and so on. So yeah, I think we are very focused on the idea of, even without these incentives, our product has strong product market fit. We just turn these things on in the last few months to actually grow. So yeah, that's how it works. For the vault that you're looking at specifically, it is for one of our new products, which is like this Rocket Pool ETH Covered Call. And yeah, I think the yields are high there because we want to incentivize people to use it.
Okay, I got it. And I see just yesterday you launched your new product, Ribbon On, which offers principal protected yields using a combination of lending and options. And it's already filled. So can you tell more how it works and how can people benefit from it? And when will be the new opening to make deposits?
Yeah, so how it works is, for existing products, which is what people call DOVs, which are just like selling calls or selling puts, there is market risk. So for example, if you are willing to sell ETH puts and ETH really collapse that week, for example, like during the Luna collapse or some of these like crazy market downturns, you do have a risk of sort of losing a part of your assets. So I think because of that, that's sort of like you're getting paid that yield because you're selling that risk. But we think a lot of our users are more interested in something that's a lot more conservative, which is maybe something that's more similar to lending in Compound or lending in Maple Finance or one of these like lending platforms. So how we have thought about Ribbon Earn is basically we take the interesting part about options and we take like the fundamentals of lending and we combine them together. So how it works is if you deposit your assets onto the platform, we lend it out. These are actually under collateralized loans to market makers. So very similar to Maple and a bunch of these other lending platforms. And we take the interest that you get from lending and we go and buy options with it. So that means if these options are worthless, you get your money back. But if your market view is right, you get like a sort of additional yield on what you get. So yeah, that's how it works. We launched this we announced it last week and we just launched it yesterday. We are going to start rolling it out next week. So we are also very excited to see how it performs in production.
Yeah, and actually there are, like you mentioned, like Maple Finance, and there are a few other projects which seems to be quite similar, like SIGA, Polynomial Fi, Pods Finance. So what are your differences and what are your advantages in comparison to those ones?
Yeah, so I would say our product's like a combination of maybe Maple Finance plus what we currently do. So Maple Finance is like a platform to do under collateralized lending to big trading firms. So like market makers like Wintermute or Alameda or some of these guys. And we have a very similar model for how we do the lending component. And on the flip side, instead of just getting paid, like your 5% for lending into these pools, we take that interest and we help you buy options with it. So we think that just makes it a much more interesting payoff for a lot of users. For example, if you think the market's going to be really volatile the next few months, you basically you have a higher chance of these options paying out. That might be a much more interesting value proposition than just lending it in like a sort of passive lending platform. So yeah, we think users get to have like the nice parts about lending, which is your principal is not affected by the market, but you also get to like express some market view with the interest. So yeah, that's sort of how we think the value proposition of the product is. And I think hopefully the demand from yesterday sort of proves that there's some interest, but we'll see how it performs in the long term.
So it's if currently Ribbon Earn is filled, it's reached 2.5 million. So when will it be available for more users to make deposits and benefit from it?
Yeah, so we actually raised it again yesterday to 5 and it filled up again. So we will do like the first cycle with $5 million and we'll see how it goes. And then we'll see if we can increase capacity. But I mean, our goal is obviously to get as many people using it as possible. So we're not trying to gatekeep this on purpose. It's sort of more of like a early test run before we fully open it up.
And as well, all your vaults as well have some cap on capacity. So how does it work? Does it depend on the specific strategy you use, that you can work with only specific amount of assets, or can you raise it as well?
We can raise it, but I think it is basically just for us to not have any crazy surprises. So for example, like if some big trading firm deposits like $100 million into one of these strategies, it would be like too drastic of a change on like a week-to-week basis. So we think having it as a more measured approach where if demand fills up, then we expand, demand fills up, and then we expand. That's a much better way of managing these things instead of having it completely unpredictable. So yeah, to some sense, these capacities are not like constraining, but they're just ways for us to basically plan our business better.
Mm-hmm. And you have as well your own token, RBN. Can you tell more? How does it work?
Yeah, so RBN is a governance token that governs everything that all the Ribbon products. And so, for example, I think the most interesting use case of the Ribbon token is our current Vault products generate protocol revenue. So we charge like a fee on the current vaults, and that goes into the DAO treasury. And token holders basically get to vote what to do with these with the protocol revenue that's accrued. So, for example, the most recent governance proposal that we passed was to reimburse some users for this like DNS attack that we face as a platform. So I think that is the kind of thing that has been voted on before. And also you also get to vote on where these incentives go to. So for example, like this Rocket Pool ETH product that you mentioned, I think the Rocket Pool users were very interested in incentivizing it. So they may buy Ribbon tokens and vote for incentives to go to that pool instead. So yeah, that's sort of, we launched the token in April of last year or June of last year, and it was tradable in Q4 of last year. So it's really been trading in the market for almost a year. And yeah, I think that's sort of a high level summary of what the token does.
And do you plan some more listings on more exchanges?
We're still speaking to a bunch of folks, but yeah, we'll see.
And okay, maybe it will be a good bind for your token if you list on some more big exchanges. And as well, in June, I know you issued your first debt on chain. And can you tell more about it, and why did you decide to raise more funds this way?
Yeah, so we were really just exploring this idea of doing these like on-chain credit and on-chain debt. And one of the protocols that we were speaking to is Porter Finance. Unfortunately, they decided to like close operations a few weeks ago. But I think we were very interested in seeing, okay, how can the DAO raise debt capital on chain and use some of the debt capital to fuel growth in our products. So for example, maybe we could use some of those assets to acquire users. We could use some of those assets to give us incentives for people to use the product. These were all sort of ideas that we had. And yeah, but I think more than that, it was really just like an experiment of how a DAO could raise debt capital on chain. But I think sort of with like Porter closing down, I think we decided to allow like early redemptions for some of these bond buyers. So a lot of them have redeemed some of the bonds. So the amount that we ended up raising is not that much, and I think it's just like it was more experimental than having like a clear view of how to spend that money.
So how much did you manage to raise this way?
So we raised 3 in total, and we allowed a portion of that for early redemption. So I think most of it's actually already redeemed. Yeah.
Not that bad actually. And
Yeah.
as well, you got investment from one of the biggest funds in the space, Paradigm, of 8.8 million, and it's your strategic investor. I know you closely work with them. Can you tell more about your collaboration with them?
Yeah, so we raised from Paradigm end of last year or early this year, and I think they hadn't really made any investments in like the DOV space or like the structured product space. So we were very interested in working with them on sort of some stuff like how, for example, I think one interesting question of our product was when we sell off these options, we do like this auction on chain. So we were very interested in working with them on how do we optimize this auction to create like the most surplus for our users. What kinds of interesting crypto mechanisms can we actually use to make this like make the execution as good as possible. But yeah, I mean, I think beyond that, like they are one of the best funds in the space, and they're like just a very they're sort of like they have the best reputation for being like good long-term partners. So we are very excited to work with them.
Great. And as well, I see you support different chains, Solana, Avalanche, as well you support different assets like Aave. Do you plan to support more blockchains?
Yeah, so we started this like multi-chain strategy this year. And as you mentioned, the two other chains that we're on other than Ethereum is AVAX and Solana. Honestly, I think when we started doing this strategy, like the layer one trade was really hot, and like these layer one tokens were just really large, and people were looking to do these covered call strategies on these major blockchains. So we launched AVAX, we launched Sol, but I think since then the demand for that has actually come down a lot. So we are not planning to deploy on any other major chains in the future until sort of this comes back. But yeah, I think we are sort of we sort of just follow where demand goes. We don't really have like a strong view on where demand will go. We'll sort of just follow it. But for now, I think Ethereum's like our home base. We started on Ethereum. The assets on Ethereum still make up 90+% of our TVL. So I would say like majority of our users are on Ethereum.
And what do you expect from Ethereum merge?
Yeah, I mean, I think it's pretty interesting. I don't even know what to expect. I'm sure a lot of DeFi projects will have a lot of crazy mechanics on like the proof of work fork. So I'll be very interested to follow like all the drama that happens with like the ETH POW. But I mean, I expect it to go pretty smoothly. I don't really think there'll be many hiccups on the proof of stake side of things. Yeah, I'm just here for the drama.
And how do you generally see current market? What do you expect from it as well? Like you can basically see the sentiment on the market by the deposits in your vaults, by the use of your products. So what are your comments on this?
Yeah, I think we were clearly in like a bear market post like Luna crisis. People just withdrew their assets from all these DeFi protocols, and I just sitting in cash, or some people might have even like moved money back into fiat. But I think we're starting to see some of that come back. So there are like little pockets of activity popping up in DeFi, in NFTs, in like on-chain activity. So I am sort of watching very closely as to when the market picks up again. So we have seen like a sort of bump in TVL in the last month, I would say. And this is like, I'm like cautiously optimistic. So we'll see if this is like just a bear market rally or this is like something, the start of like another cycle. But yeah, I think we are starting to see some signs of life.
And can you share your crypto bags? What assets do you hold, and what altcoins do you consider potential?
Yeah, other than majors, I hold, obviously I own a lot of RBN, which is our own token. I own some Lido, and I also own some XMON. So those are like the bags that I currently hold.
What is the last one?
XMON. It's like if you follow this project called SudoSwap, it's like this NFT AMM. So I'm good friends with some of the team there, and yeah, I think it's just a very interesting idea.
Cool. And can you share as well some future plans for development of Ribbon Finance?
Yeah, so our main focus now is growing Ribbon Earn. So we'll see how it goes in the next month, and we'll be deploying more versions of Ribbon Earn for different assets like ETH and Bitcoin. And we're also sort of launching like a brand new options trading product in sort of a month or two. So that's like a bit of an alpha leak. Won't share too much more beyond that.
Okay, we'll follow your updates, and maybe our audience can check out your own product. Thank you for an interesting conversation.
Thank you.